Good afternoon. This is Galen Barbos with Lawrence Berkeley National Lab. I'm joined here by my colleagues Salma El-Mala and Will Gorman. And we're excited to share with all of you today some findings from a report that we just put out last week discussing trends in the market for behind-the-meter solar plus storage. Before we get going here, I just want to go over kind of the standard housekeeping items. First of all, this webinar is being recorded, and we will post a recording of the webinar on the web. The URL where the report resides and where the webinar recording will get posted is at the bottom of the page here. Probably most of you already have that hyperlink through the report announcement or the webinar announcement that you probably already received, which is why you're here. But that, in any case, is where you'll be able to find a recording of the webinar, as well as the slide deck. And the slide deck that I'll be presenting here today is really just the report itself. So there's no separate set of webinar slides. It's really just the report. And so that's already up, of course, along with kind of a short narrative fact sheet summary that highlights some of the key findings from the report. The other thing just to mention before we get going is we will have some time at the end for Q&A. And I would encourage all of you to answer or ask questions as we go. You'll all see a Q&A button somewhere in the kind of control panel on your side. So feel free to ask any questions. Salma and Will are in the background, and if there's kind of easy clarifying stuff, they can answer those questions as we go. But anything meatier we can save for the end. And again, just please feel free to enter those as we go, and we'll get them queued up. So with that, let's begin. I think it's safe to say that there's just been this really kind of rapid increase in interest within the industry in pairing distributed solar with storage, but there hasn't really been, at least to our knowledge, really a lot of information about how this market is kind of currently evolving and constituted. And so that was the motivation for this project, where we really just kind of wanted to look at the data that we have and understand some of the broad contours of this market. So much of the report is what I would describe as kind of a descriptive analysis, really just kind of looking at the data and kind of characterizing some of the key trends. Those trends relate to deployment, both kind of where and to what extent we're seeing solar and storage co-deployed, system characteristics, how big are these systems, what are kind of the typical configurations, looking at the characteristics of the installers, the firms who are putting these systems in place, and looking at the cost and price of these systems. And really in that section, we are concerned primarily with understanding what is the kind of the incremental cost of adding storage to PV. What's kind of that price premium, so to speak. Beyond those kind of core descriptive elements of this report, we also had two separate side analyses that really both aim to understand kind of the drivers for deployment, at least kind of current deployment levels. And so the first of those two side analyses looks at the kind of the financial value to the host customer. What's kind of the financial value proposition of adding storage to solar? And we'll talk a bit more about kind of how we approach that analysis as we get there. And then the other side analysis looks at the resilience value, or really kind of more specifically, we attempt to kind of estimate and gauge the backup power capabilities that residential solar plus storage systems can offer kind of as those systems are currently being deployed and configured. So that's the scope of the report in a nutshell. Before getting into the findings, I wanted to just give a little bit of a sense of the data underlying the descriptive analysis in the report. So most of the data that underlies this analysis comes from our annual Tracking the Sun report. Many of you are probably already aware of that report. It's something we've been doing for, gosh, I don't know, 13, 14 years now at this point. And that it involves collecting project level data from individual utilities and state agencies and other entities around the country. And for each of these individual systems, we'll have information about size of the system, when it was installed, the kind of equipment that is being used, the company that installed the system, the cost, et cetera, et cetera. Certainly the completeness of these various data fields can vary quite a bit from data provider to data provider, but that's the kind of information that we're collecting kind of at a project level. Altogether, we have data on about 50,000 paired residential solar+storage systems and about 1,000 non-residential systems installed through the end of last year. We estimate, and I would emphasize that word estimate, that that sample represents about 90% of the entire population of all paired residential and non-residential systems in the country. The figures here, which break that sample out by sector and to some extent by state, really just aim to emphasize that our sample is pretty heavily dominated by California and Hawaii, and that is just really kind of a function of where the market exists and is most prevalent. As noted on the bottom of the slide here, within the analysis of installed prices, we also were fortunate to be able to bring in some data that Energy Sage provided us, some quote data that supplements some of the installed pricing data that we collect through Tracking the Sun, and I'll talk more about that when we get there. So with that, let's turn to deployment trends, and this is probably the largest and most substantial kind of portion of the report in terms of the amount of material. So first, just to put all of this in kind of give it some sense of scale, in total, about 3,200 megawatts of battery storage capacity was installed in the US through the end of last year. That includes both kind of distributed and utility scale battery storage. Of that 3,200, about 1,000 was installed behind the meter. And of that 1,000, about half, a little over half, was paired with solar. And you can kind of see how that breaks out by sector in our figure here, which this always looks like a kind of Mickey Mouse Cyclops face, but it shows you kind of how that storage capacity is distributed across the different sectors, and within each sector, how much of that capacity is paired with solar. And you can see on the residential side that the vast majority of all behind the meter residential storage is being paired with solar, about 80%. And that's driven by kind of a combination of factors, rules related to the investment tax credit, rate reforms, and as I'll talk about further, resilience considerations. In contrast, on the non-residential side, most behind the meter non-residential storage actually is installed on a standalone basis. Only about 40% is paired with solar. And then just for reference, you can see within the utility scale or front of the meter segment, a little under 20% of all of that storage capacity is paired with solar. So often when we talk about deployment trends, we do so in terms of attachment rates, which is really in this case just the percentage of PV installations in each year that include storage. And so the figures here show attachment rates on the top for residential PV systems and on the bottom for non-residential systems, broken out again to some extent by state. And you can see in both figures here that Hawaii really is kind of in a class of its own in terms of the attachment rates, where about 80% of all residential systems installed last year, about 40% of non-residential PV systems were paired with storage. And as we'll show, I think on the next slide, that's really being driven to a large degree by net metering reforms in the state. California, which as we saw a couple slides ago, represents the lion's share of all systems, of all paired behind the meter solar+storage systems in the US, also has relatively high attachment rates, certainly well below Hawaii's, but above the national average. where about 8% of residential systems installed last year included storage, and about 2% of non-residential systems. And then outside of California and Hawaii, attachment rates tend to be a fair bit lower. That's what the gray lines show, though certainly there are some individual utilities where we've seen relatively high attachment rates, kind of in the maybe 10 to 20% range. Looking at the temporal trends here, you can see that on the residential side, attachment rates have generally been going up over time, albeit somewhat gradually. On the non-residential side, it's maybe a little bit more mixed. Obviously, they've been going up in Hawaii, been going down in California, and then elsewhere, at least in aggregate, they're kind of relatively flat. So I want to just kind of delve into a couple individual state markets here, talking first about Hawaii. As I mentioned, the growth of solar+storage in Hawaii is being driven to a significant degree by NEM reforms in the state. Over the past 5 years or so, Hawaii has been transitioning away from net metering and towards a series of alternative rate structures or compensation structures that either prohibit PV customers from exporting to the grid, or that provide lower levels of compensation for any PV generation that gets exported. And in either case, that provides a strong signal to PV adopters to include storage, so that they can eliminate, if not reduce, if not eliminate those grid exports. And in the figure here, you can see how the migration of the market towards these NEM alternatives over time has really been happening in concert with this move towards increased adoption of solar+storage. Here we dive into trends in California, breaking out the data across the 3 major investor-owned utilities, and focusing here just on kind of the residential market. So in the top figure here, we show attachment rates for each of the 3 IOUs, and in the bottom figure, we show just the total number of paired residential systems interconnected in each month. And the trends in California that we see are being driven kind of by a couple different factors. California has for many years offered incentives for behind-the-meter storage through the self-generation incentive program, and that's certainly been driving the market to some degree. In addition, and more recently, there have just been all the sort of wildfires and public safety power shutoff (PSPS) events that have then spurred this kind of newfound concerns and interest in kind of reliability related issues. And those PSPS events, those have been most significant within PG&E's territory. And in the figure on the bottom, you can see by that dashed gray line when kind of the largest PSPS events were initiated in the fall of 2019. And looking at that figure there, you can see that after those PSPS events, we saw pretty steep uptick in paired PV plus storage interconnections. Now, of course, those interconnections were also trending up before those events, so it's maybe a little bit unclear whether what we're seeing is a response to the PSPS events or just kind of a continuation and maybe slight acceleration of the trends that were already happening before. But I would note that following those PSPS events, while the line is trending rapidly up in PG&E's territory, it's remaining flat or relatively flat in the other 2 utility service territories, which tells us something that there is something different going on here between PG&E and the other utilities, and it seems reasonable to expect that these PSPS events are at least part of that story. Digging kind of further and more granularly into this data, here we show residential attachment rates at the zip code level in California, Hawaii, or rather on Oahu, and in Arizona. In California, you can see that the attachment rates, they do vary quite a bit from zip code to zip code. Within in 2020, anywhere from 0 to as much as 70% of new PV installs in any given zip included storage. For those that live in California or are familiar with its geography and history, you'll see that there is, a pretty clear correspondence between where some of those high attachment rates exist and where some of the biggest wildfire and PSPS impacts have occurred, kind of in that northern part of the state, North Bay. At the same time, demographics are also probably playing some role here. If you look at the 10 zip codes that have the highest attachment rates, 9 of those are pretty wealthy communities. So again, for those that live in the area, you've got Tiburon and Sausalito and Mill Valley among those top 10, and Malibu and some other relatively affluent places. So certainly income and demographics are part of that. And I think one area that is ripe for further research and investigation is to try to understand some of the kind of the drivers, and to kind of parse out some of the drivers for these adoption trends. In Hawaii, the map is not very interesting because you can see that, universally those attachment rates are pretty high, as you'd expect. And then in Arizona, which at a statewide level doesn't have particularly high attachment rates, you can see that there are pockets where solar+storage it has become fairly common. And so one of those pockets is basically just the service territory of Salt River Project, SRP. SRP, a few years ago, maybe more than a few years ago at this point, required that new residential PV customers take service under demand charge rates. I think those requirements have eased a little bit, but suffice to say that the rate reforms that SRP has instituted for residential solar customers have really helped to kind of drive this co-adoption trend that we see there. The highest attachment rates in Arizona, however, are actually not in SRP's territory, but are up in that northwestern quadrant there. When we first generated this map, I really had no idea what was going on there, but with a little bit of old-fashioned Googling, we were able to determine that basically that is entirely due to a partnership between a large housing developer and a battery manufacturer, Sonnen, and where the housing developer is just putting solar+storage as a standard feature on homes throughout a bunch of large housing developments in the region. And so that's in that northwestern part of Arizona, that's really what's driving the darker shades up there. So here I just wanted to dive in a little bit to kind of the customer segmentation details, looking at who are these customers that are adopting solar+storage, and really kind of comparing those customers to just your typical solar adopter. And so in the figure on the top, which focuses on residential adopters, we're looking specifically at income levels, household income levels of paired PV plus storage adopters compared to standalone PV adopters. This figure actually is just excerpted directly from a different report of ours, which I've provided a reference to at the bottom of the slide here, but we wanted to include it in this report just because it is so clearly relevant. And what we show here, not surprisingly, is that households that are installing paired systems do tend to have higher incomes than those who are installing standalone systems. So for example, in California, households adopting paired PV plus storage had median incomes that were about 160% of the area median income. And that compares to 140% of area median income for standalone PV adopters. So that's kind of the differential. The bottom figure focuses on non-residential customers and breaks those out based on kind of the non-residential customer type, the legend on the right-hand side. And across the different categories here, you can see that for-profit commercial customers make up about 70% of the market, both for paired systems and standalone systems. The interesting difference, though, is that for those paired systems, you can see that most of the remainder consists of schools, which is not the case when looking at standalone systems. And that, we can sort of posit, some hypotheses for that trend. If I had to guess, it's probably that schools do have some unique resilience value that they might receive by installing paired systems. both just given the nature of what schools do and kind of the health and safety requirements that they have, but also that schools often may serve as kind of community shelters, and so may have some need to be able to ensure reliable power even during outages. In addition, schools are also relatively large non-residential customers, at least compared to sort of typical like retail establishment, and so schools will tend to be on rates with high demand charges, and therefore will tend to see a greater kind of value, kind of financial bill savings value from installing Solar+Storage. So the last slide here, which I won't really go into in great depth, just talks about the role of retrofits. And what I mean by that is a customer has installed a PV system, and then 1, 2, 3 years later, they come back and install a storage system on top of that. And this is at least in California a significant part of the market. And it's particularly significant, I would say, on the non-residential side, where for example, if you look at the figure on the bottom right, which shows breaks out kind of paired storage systems installed each year, you can see that about half of all non-residential storage systems that were paired with PV last year were installed as retrofits rather than kind of co-installs at the same time. So that concludes the discussion of deployment trends. We'll turn now to looking at some of the kind of technical characteristics of these systems. So the slide here, it's got a lot of information, but really the kind of key takeaways are all pretty straightforward. So I'll just kind of quickly go through each of the figures here, starting on the upper left, where we break out paired residential systems based on storage manufacturer. And you can see that the market is really dominated primarily by two products, Tesla Powerwall and LG Chem's Resu 10H. These are both 5 kW systems with slightly different durations, 2.7 hour duration for the Tesla and a little bit under 2 for the LG battery. Most paired residential systems have a single battery, so a single 5 kW, either Powerwall or Resu 10H. But as you can see in that figure on the upper right, multi-battery systems have become more common, and about 40% of all paired residential systems installed last year had 2 or more batteries. And my guess is what's going on there is just the kind of increasing interest and demand for backup power, which in many cases is going to require more than a single battery if you want to be able to sustain large amounts of load for multiple days. PV systems that are installed along with storage tend to be slightly larger than standalone PV systems. You can see that in the figure on the bottom left. And then the figure on the bottom right, it basically compares the storage system size to the PV system size that it's paired with. And we do that both in kilowatt hour terms and kilowatt hour terms. The kilowatt hour ratio, I think, to me at least, is a little bit more interesting and useful. And what those numbers represent is the battery storage capacity in kilowatt hours as a fraction of the average daily the average daily PV generation. So in essence, how much of your average daily PV production can you store in your battery? And you can see that that number, the yellow bars, it varies across the sample of systems, but in general, you're looking at somewhere between, say, 30% and 80% of your PV generation on an average day could you then store within your battery. And that can be important when thinking about the role of these systems in providing backup power, or the role of batteries in helping to manage solar exports and self-consumption. The next slide here is just provides kind of an analogous set of figures for non-residential systems. I'm actually going to skip over this in the interest of time, but if anybody is terribly sad or disappointed about that, feel free to just register your disappointment in the Q&A box, and we can try to get to this during the Q&A section. The next bit of analysis looks at the installer market. So kind of the understanding, what companies are doing Solar+Storage and kind of what fraction of the market do they represent. Again, we've got a whole bunch of different figures kind of exploring this topic from different angles. This slide focuses on residential systems, and I'll again kind of quickly go around the set of figures here, just pulling out the key takeaways. So in that figure on the upper left, what we're just trying to understand there is, how many or what fraction of PV installers active in each year have actually done a PV plus storage system. And this is, maybe important when thinking about the fact that, not every PV installer can just easily go out and start doing PV plus storage. I mean, there are perhaps some unique technical skills that are required, maybe new vendor relationships that have to be established, maybe new interconnection and permitting processes that have to be kind of understood. And so given those transaction costs, we wanted to sort of understand, how prevalent is this within kind of the installer community? And what you can see there is that actually about half of all PV installers have, at least at some point in time, done a paired PV plus storage system. And that was a larger number than what I was expecting, given that only 8% or maybe 6%, I guess, of all residential systems include storage. Notwithstanding the fact that half of all installers have done at least one Solar+Storage system, the market is still pretty concentrated among a small set of installers. And there are a couple figures here that kind of speak to that. The figure on the upper right shows market concentration levels expressed in terms of the Herfindahl-Hirschman index, or HHI. So a larger number means more concentration. And you can see that both for the US as a whole and then for each individual state, that the installer market for paired systems is quite a bit more concentrated than for standalone PV. You can sort of understand that maybe a little bit more concretely looking at the pie chart on the lower left, where you can see that there were 10 firms in total that represent about 60% of all paired residential PV plus storage systems installed last year. Tesla and Sunrun each represented about 20% of the market. And the remainder of those top 10 firms are, for the most part, kind of local California and Hawaii firms. The figure on the bottom right, I found to be kind of interesting. So this shows attachment rates by installer for the 10 largest installers in California, and then also for kind of all other installers in the state combined. So this shows, in 2020, what fraction of PV systems installed by each of these firms included storage. And I found it surprising and notable that there's such a huge variation here. With Tesla and Sunrun, you're looking at maybe 25, 30% of all the systems. But then for some of these other large firms, it was 0 or very small percentages, which to me just, is indicative of kind of the state of the market, and that there's maybe not complete consensus within the industry about the business case for doing Solar+Storage. Or at least that's sort of my interpretation. So the next slide here, again, kind of provides the non-residential version of the figures we just looked at. And I will, again, skip over this in the interest of time. And again, invite anybody who's disappointed about that to just ping us in the Q&A box, and we can come back to this if we have time. So the last of these descriptive elements focuses on looking at installed prices. And as I mentioned earlier, and I'll just emphasize again, our focus here is really primarily on understanding the difference in the installed price or installed cost between a paired PV plus storage system versus a standalone PV system. So, as we've kind of expressed it here on this slide, the premium associated with adding storage. And we sort of try to triangulate an answer to that question among a bunch of different data sources. So we've got kind of 3 different data sources that I've listed here. There's our Tracking the Sun data, where what we have is the reported total installed price, both for paired systems and for standalone systems. And we can just kind of compare between the two and infer what that premium might be. We then have data from the California Self-Generation Incentive Program, where, as I mentioned, customers receive incentives, rebates for storage equipment, and where the applicants are required to provide information to report the cost of that storage equipment. And so in that case, we can look at sort of, what is being reported as the cost for the storage equipment in cases where the systems are being paired with PV, which on the residential side is kind of the vast majority. And then last, we have this data from Energy Sage, which I hinted at earlier. So Energy Sage, as many of you know, they are a web platform, among other things, whereby customers can request quotes from installers for PV systems and importantly for this work, for paired PV plus storage systems. And the nice thing about the Energy Sage data, which they were nice enough to share with us, is that installers who submit quotes for paired PV plus storage systems also will provide a companion quote to the same customer for the same system, but without storage. And so it's a very clear kind of with and without comparison that we can do, so that we don't have to really make any inferences about that premium, but we can sort of observe it directly. And so that's a nice data source, even if it is maybe somewhat limited in terms of the depth of the market that it covers. So we'll kind of go through quickly all three of these, and I'll just tell you at the outset that they all, in the end, basically agree with each other, which is very nice. But I'll just kind of quickly walk you through all three so that you can see for yourself that that's the case. So first here, we look at the Tracking the Sun data. The figure on the top compares median installed prices reported for paired systems versus standalone systems, broken out into residential, small non-residential, and large non-residential systems. And just comparing the median prices for residential systems, there's about $1 per 20 watt PV difference in median prices between paired and standalone systems. And so that's about a 33% premium above and beyond the cost of a standalone system for adding storage. And if you kind of make some assumptions about kind of typical PV and storage system sizes, that equates to an implicit storage cost of about $700 per kilowatt hour of storage capacity. Interesting, and I would just to maybe round out the discussion of that top figure, similar pricing difference for small non-residential systems, and not surprisingly a smaller difference for those large systems, though I would just caution that the sample sizes there are pretty small. The figure on the bottom is interesting and sort of surprising in what it shows, where we're looking at temporal trends in the aggregate reported installed price for paired systems. We've sort of filtered the data down just to look at host-owned systems with a single 5 kW battery, just to kind of control for those variables. And what we see is that for most installers, the reported prices have actually been rising over time, even though I think the conventional wisdom and the understanding that most of us have is that the cost of manufacturing storage is going down, but yet we see kind of on the retail side that the prices that customers are paying are actually going up, and that presumably has to do with supply chain constraints and perhaps to some extent kind of with value-based pricing. So that's what the Tracking the Sun data shows us kind of in a kind of basic descriptive comparison. We also ran a multivariate regression model that attempts to control for all of the different confounding factors and to sort of statistically isolate the impact of storage. I won't talk really about kind of the details of that model. The appendix has those details if you're interested. But the bottom line is that across a range of different model specifications and different ways of defining the sample, we ended up with kind of a range of between $1.15 and $1.46 per watt PV, which kind of encompasses the number that I cited on the previous slide. Here we show data from the SGIP program, which again is based on reported costs just for storage systems that are being co-installed with solar. And on the top we show kind of break this out for residential and non-residential systems based on the size of the storage system. On the residential side, you can see, pretty much across the board, those reported costs are centered around $1,000 per kilowatt hour. On the non-residential side, they're similar, though you can see some economies of scale as you progress to larger storage system sizes. And then in the figure on the bottom, this is sort of analogous to the one we looked at a couple slides ago, shows temporal trends in these reported storage costs. And the data here, again, kind of agree with what we saw when looking at the aggregate system level prices, which is that in general, those values are going up over time. There are some kind of interesting quirks in the data for sure, but the general trend seems to be kind of pointing up, at least over the 3-year span that we've looked at here. And then the last data source is the Energy Sage quote data. I won't really run through all of this in detail. I kind of explained to you already the features of this data, which make it maybe particularly useful in discerning that price premium. And that premium, based on the quote data, works out to about $1,200 per kilowatt hour of storage, or given the PV system sizes that storage is being attached to, about $1.50 per watt PV. So putting that all together, at the top of the slide here, we just included a few other kind of data points, data sources that some of you may be familiar with. And those data points, along with the data that we just ran through in the previous slide, all kind of collectively, if you wanted to make some sort of baseline benchmark assumptions about the incremental cost of adding storage to solar, it's typically somewhere in the ballpark of $1,000 per kilowatt hour of storage, or about $1.20 per watt PV for a residential system, though certainly, as we've seen, there can be a lot of variation around those kind of central tendencies. So that concludes the kind of core descriptive analysis within the report. We've got maybe a few minutes left here, 20 minutes left. I'd like to certainly save some time for Q&A, but I do want to quickly run through these other side analyses that I mentioned. And the first of these really just attempts to understand what is the kind of financial value proposition to the host customer of adding storage to PV. And so we did this, really just kind of based on a pro forma financial analysis, looking at a handful of different key markets and looking at kind of the most common financial benefit streams as of last year. So that includes looking at utility bill savings, any rebates or incentives that are available, and then tax incentives as well. And so here we see the results of that analysis for 4 different utilities looking at residential storage. So this is, again, this attempts to answer the question, what is the value to the customer, the financial value of adding storage to PV? And these value stacks here are denominated in terms of dollars per kilowatt hour of storage on a present value basis. You can see how they kind of break out among these different value streams. The bottom line here is that across these 4 utilities, which are all utilities that have seen relatively high attachment rates, the economics actually are surprisingly marginal. We're looking at typically returns of somewhere on the order of $500 to $1,000 per kilowatt hour of storage, compared to, as we saw a couple slides ago, typical costs of about $1,000 per kilowatt hour of storage. And so what that suggests to me is that the co-adoption that we're seeing is to some extent being driven perhaps by kind of customers with unique conditions that kind of deviate from the assumptions that we've made here. So kind of more kind of niche applications, But more generally, I think, what the story that this suggests to me is that a lot of this co-adoption is being driven by non-financial considerations, principally, concerns about reliability and resilience and kind of a desire to have some backup power capabilities. So that's the residential side. Here we look at kind of the comparable numbers for non-residential storage added to PV, just for the kind of two largest California IOUs. And the numbers here are higher than what we see on the residential side, typically in the kind of $1,200 to $2,000 per kilowatt hour range in terms of the financial benefits to the customer. And those numbers are higher than the residential numbers, principally for two reasons. One, there's this additional tax benefit that non-residential customers can receive in the form of accelerated depreciation. And then in addition, and especially for larger non-residential customers who tend to take service under rates with large demand charges, the bill savings are much greater, or can be much greater, given the ability of storage, especially when paired with solar, to clip those demand charges. The last little bit of analysis, which I will try to deliver in a comprehensive or an understandable way, even though we only have a few minutes left, looks at the backup power capabilities of Solar+Storage. Really kind of first and foremost looking at kind of systems as they're currently configured. So kind of given the sizes that we're kind of currently seeing deployed in the market, what level of backup power capabilities might we expect from these systems? And we approach this question through a kind of a modeling exercise, where we simulated on a day-by-day basis for residential customers in a number of different states, how much of their daily load over the course of a year could be maintained with a typical Solar+Storage system. And so I'll show you the results of that analysis on the next slide. We also, separate from that analysis, also answered the question, how big would a system need to be in order to maintain higher levels of reliability for the host customer? So, in other words, if typical systems are about 7 kW PV and say 10 kWh of storage capacity, how much bigger would those need to be if we wanted to reach, say 99% load carrying capability? So here we look at the results just for a typical residential PV plus storage system. And as I mentioned, the simulation looks at what fraction of a customer's daily consumption could be served by that kind of typically sized system. And we do that for 4 different states that you can see here. The figure on the top shows the results on a day-by-day basis over the course of the year, and you can see there's a lot of volatility there. That volatility is, obviously being driven to a significant degree by weather, by cloud cover. And so on cloudy days, you're not generating as much solar, and therefore you have less energy available to back up your load. There's also seasonal variation, which you can see in the figure on the lower left. So typically, these systems provide more backup power capability during the summer months because you've got more solar generation and typically less cloudiness during the summer. But in hot air climates with a lot of air conditioning load like Arizona, the opposite can be true, because in the summer months you've also got a lot more cooling load that would need to be backed up, and so you're not able to back up nearly as much, at least on a percentage basis, of your daily load, given that kind of typical system configuration. Kind of just putting this all into some kind of simple metrics or numbers. On an annual average basis, we find that this typical residential PV plus storage system could maintain between 60 to 80% of average daily consumption across the 4 states. That's what kind of the upper bars in the figure on the lower right show. That's for a customer with average consumption levels in each of those states. For customers that have higher than average consumption levels, which may be more representative of who's actually installing these systems, obviously those percentages are lower. And in the case of the kind of loads that we modeled, it came out to be between 45 and 65%. So that's kind of the level of backup power capabilities that a system would provide, given kind of typical sizes that we see installed today. As I mentioned, we also asked the question, how big would the system need to be in order to meet higher levels of load on a day-by-day basis? Figures here kind of show that number across different levels of load served. That's the x-axis in these figures, and under different assumptions about the customer consumption level. So either kind of that average consumption customer, the base load values shown here, or for the high load customers on the right. And what we see when doing this analysis is that, to get to, say, 90% of loads served, you need, larger than a typical system, but not that much larger. So across these 4 states, somewhere between 8 to 14 kW of PV and between 15 to 22 kilowatt hours of storage in order to maintain, roughly 90% of your load over the course of the year. To go beyond 90%, those numbers go up quite a bit, and you can see that there's an especially sharp kink when you go past 99% to 100%. And so obviously at a certain point, it just becomes sort of infeasible, or either cost prohibitive or space prohibitive. But getting up to 90% doesn't seem to be out of the realm of reason, at least, for sort of a customer with typical consumption levels. Now, nowhere in this analysis did we consider energy efficiency or load flexibility, which certainly could go a long way towards stretching the backup power capabilities of these systems. We actually have a whole new series of projects that we're planning on launching over the next few years that are going to delve into those issues specifically. So the analysis that we're showing here is just sort of the tip of the iceberg into a whole new research area that we're planning to explore. But I think even on its own provides some useful lessons and takeaways. So that's really it in terms of the presentation. There are some high-level conclusions here at the end, but nothing really that I haven't already stated when going through the main deck. So I think with that, I want to open it up to Q&A. I can see we've got lots of questions here. And so I'm going to turn things over to Will and Salma, who will help to moderate the Q&A session.
Great. Yeah, no, thanks, Galen. Great presentation. And me and Salma will kind of go back and forth and try to be judicious with our last 10 minutes here. So the first question for you is somewhat clarifying, just to kind of set the scope of what this work was. But we got a lot of questions actually interested in whether we did any comparing and contrasting of utility scale storage to the behind the meter storage. That was the focus here. And some of those questions were related to whether those are competing in any way. And so there's questions of the duck curve in California and whether behind the meter storage can compete or kind of interact with that issue in the same way as grid scale storage. So yeah, just general questions about what we thought about utility scale here, and if you have any comments about how they might interact with each other.
Yeah, I mean, so that definitely was not part of the scope of this project. Though certainly within our team, we've done a lot of work on the utility scale side, and in fact, Will has done a lot of that work himself. But yeah, no, I think in terms of kind of understanding the interactions between these two market segments, I mean, there's a lot that could be said about their interactions in terms of their grid impacts. And I might sort of not delve into that for the purpose of this call, but at least in terms of how the kind of the markets are developing. I mean, I would say for the most part, kind of operating in parallel. But there are, I think, increasingly opportunities for kind of smaller distributed systems to provide grid services and participate in bulk power markets that in a way that previously they haven't really been able to, and that only utility scale systems have been able to. And so, going forward, as those market mechanisms develop further, we could see kind of more of a convergence in terms of how the kind of distributed and utility scale markets are developing in terms of where systems are being installed and what kind of capabilities and functionality they might have.
Thanks, Galen. I'm gonna ask another question. So this question is about how to get more adoption of behind the grid storage. So they're asking, do you think state tax incentives are sufficient to get more behind the grid storage for residential customers? And this attendee just notes that some of these trends seem sadly underwhelming in the long term.
Yeah. I don't have any great recommendations there. I think, what the data seem to suggest is that incentives of any form, whether it's tax incentives or rebates or something else, can be important in driving the market. I think, part of why we see relatively high attachment rates in California is because of the existence of those SCHIP incentives. But at the same time, I think, at least given the market as it kind of currently exists, a lot of the adoption behavior seems to be happening for kind of non-economic reasons. And so it may not necessarily be as simple as just throwing more money at the problem. It may not hurt, but there may be sort of more targeted ways of harnessing the decision-making processes and the drivers to customers' adoption behavior than just simply offering more incentives. And I think as far as tax incentives are concerned, those I think can be tricky, just given the differential ability of customers to actually monetize those incentives. And this is something that I think often comes up in the context of discussions around kind of equity and access among kind of low income and disadvantaged communities, where maybe there's not kind of the tax appetite often to monetize those tax credits. And so to the extent that there's also an interest in sort of advancing deployment within those communities, tax incentives may not always be the most sort of well targeted.
Great. So next question here is kind of thinking a little bit about what we were expecting maybe before this project. And this attendee was interested in whether we would have expected that non-residential to actually have a higher percentage of solar+storage adoption than residential. Obviously, we didn't see that. And what are your kind of thoughts about that trend?
Yeah, no, that's right. Absolutely. That was definitely surprising. And I kind of flew through that slide near the end where we looked at the kind of financial returns to non-residential customers from adding storage to solar. And yeah, they seem to be pretty compelling. And yet we're not seeing kind of the co-adoption levels. I think that I don't have certainly a definitive answer. Probably there are people on this call who have a much better answer than me, but at least in terms of kind of my immediate reaction, I think that non-residential customers, they are probably I would say sort of more geared towards kind of economic decision making than residential customers, and so it just may require there just may be higher hurdle rates. In the case of residential customers, I guess the hurdle rates can be negative and you can still see adoption, but for non-residential customers, you may need to see more than what we're seeing already. I'd also note that I guess two other things. One, that rate structure matters a lot. Large non-residential customers, they tend to be on rates with pretty substantial demand charges, and that can be a powerful signal for adopting storage, either paired with solar or on a standalone basis. But those rates are mostly geared towards the kind of the largest C&I customers. Smaller C&I customers who actually make up the vast majority by number of accounts and of PV adopters in the non-residential space many of them are not on rates with high demand charges, and so they don't necessarily see that same kind of value proposition. And then the last thing that I'll note is that, there may be a little bit of a kind of a COVID factor here that hasn't, that sort of is suppressing the trend that we otherwise might see. I would guess that within the non-residential sector, adoption in 2020 was probably much more severely curtailed as a result of the pandemic than in the residential sector, where everybody's like just at home and doing home improvement projects. At least that's what I did. So I think it will be interesting to see, when and if things kind of return back to normal, and when businesses feel like the economic environment is such that they can, kind of start making those capital improvement projects, whether we see, sort of a not really a rebound, but a bound up in the residential space, where, we start seeing something at least kind of approaching the attachment rates that we see on the residential side.
Thanks, Galen. So this is a question about our data. It's asking, do you have additional information on the end users or market? Specifically, are these customers primarily upper, middle, low, or moderate income? And I'm assuming this is in reference to the residential customers.
Yeah, so we do. I mean, I flew through it pretty fast. I'll just go back to it here. So yeah, I mean, the data that we have is sort of illustrated in the figure on the top here, where we do show that these are, generally wealthier households that are adopting these paired systems, even more so than just among PV, kind of standalone PV adopters. We have additional data that we haven't really provided here, looking at kind of other characteristics, other demographic attributes of these households in terms of race and education level and occupation type. We haven't actually broken those out for Solar+Storage adopters specifically. But if you're interested in seeing those trends just for PV adopters writ large, I would point you towards the report that is linked at the bottom of the slide here, which has just a ton of data on kind of the demographics of residential solar adopters.
Great. So now we have a few questions kind of about backup power and resilience. So a few of the attendees referenced maybe some value of resilience methodologies that other people have done. And so one of the questions was how we really account for the value of resiliency in this work, whether that's different metrics or if we thought about maybe even valuing it from a financial standpoint. And maybe this gives us a little bit of an opportunity to talk about some of that future work too.
Yeah, no, that's a great question. And yeah, in my mind, when I was saying resilience value, I had kind of quotes around it, because of course, we don't, within this work here, kind of monetize those backup power capabilities that we otherwise express really just in kind of physical terms. But yes, within that, the new kind of work stream that we're about to launch in on, we will be sort of monetizing those kind of that backup power capability. LBL has some pretty kind of long-standing capabilities in this space. Some colleagues of ours, led by Pete Larson, developed something called the Interruption Cost Estimator, ICE is its acronym, which uses the results of kind of, I guess, contingent valuation surveys. I don't know if you know if that's correct, Will, but to estimate the kind of the value of reliability, or sort of what, to put a number, a monetary value on avoided outages. And so we'll be using kind of the results of that work and other kind of empirical research that's been done to place a monetary value on reduced outages, and we'll be using that to kind of put our results into dollar terms. And I think that'll be really useful, and will help us to kind of bridge the gap between the financial analysis and that kind of quote unquote resilience analysis.
So Galen, we are at the hour. So do you want to take one last question before we wrap up?
Yeah,
Okay.
I can take one last question, and we, folks, I would just say also feel free to ping us if we didn't get to your question. Yeah, I'm also happy to stay on a couple extra minutes as well if there are any other folks who want to ask questions. So yeah, sorry, go ahead, Salma.
Okay, sounds good. So this question is about rates, which you did talk about a little bit earlier. And so this attendee is asking, how do we get to fair tariffs or rate incentives for paired installs? And they note that, rate reform can refer to reasonable transitions, which are fair to both the owner and the grid, but it can also refer to approaches that are more punitive and penalize customers for adopting solar and storage.
Yeah, I mean, that's a big question, and it's a normative question that I'm not sure I can really answer here, but I think so. We've done a lot of work, not as part of this project, but over the years, kind of looking at sort of the role of different rate structures in kind of how they impact distributed solar and other types of distributed resources. We're doing some work now that is looking specifically at this kind of move towards net billing. So probably many of you are familiar with this, but basically the idea is, rather than allowing customers to export generation to the grid and then receive kind of full retail credit for that exported generation, that exported generation instead gets kind of separately measured and recorded, and the customer gets compensated at something less than retail prices for that exported generation, and then anything that gets produced and consumed behind the meter just offsets their usage as it would under net metering. And this move towards net billing is kind of, I would say, becoming the default successor to net metering, or at least is a common successor that we're seeing across the country. And that rate structure does provide some specific incentives to customers with Solar+Storage, because it provides, a very strong incentive for customers to install storage and then use that storage to basically move that exported generation back behind the meter so that they can get full retail rate credit for as much of their PV production as possible. And so we're doing some analysis, kind of trying to understand what is the actual value to the electric system of encouraging that sort of behavior. And the results are still early on, and so I don't want to be too definitive in what they show, but at least preliminarily what we're seeing is that, providing rate structures to solar customers with storage that sort of incentivize maximizing self-consumption of PV provides very little, and in some cases, negative value to the grid. And that if instead, customers are just operating their storage as though it were installed, in the front of the meter and responding to wholesale market prices, you can provide a lot of value to the electric system, but that's not how customers are sort of incentivized to dispatch their storage systems under net billing structures. At least that's kind of what this preliminary analysis that we've done is starting to show. So that kind of gets at the question that was being asked, albeit in a kind of technical way rather than a normative way, but hopefully that's helpful. And I think with that, maybe despite what I said a second ago about taking additional questions, I think we will kind of close this out. Before I do so, let me just forward us to the final kind of closing slide, where I provide all of our contact information and where we acknowledge all of the folks who provided feedback on the study, as well as, importantly, our funders at the Department of Energy and the Solar Energy Technologies Office, who were kind enough to fund this work. So I definitely want to thank all of them, and thank all of you for joining us today. This was really great. I'm glad that you were all able to join. And as I mentioned, if anybody has additional questions or has questions that you asked and that we didn't get to, please feel free to send me an email, and I'll do my best to respond quickly. So with that, thanks a lot. I'm going to stop the recording, and we'll see you all next time. Bye-bye.